brokerages are already crunching the numbers. Bernstein says GST cuts could mean an $18 billion hit to revenue, but a $13 billion boost to consumption, with consumers, auto and durables in the sweet spot. The common thread, consumption, looks set to shine, while industrials and capex could take a backseat. To tell us which sector stands to benefit the most and where investors should be cautious, let's go across Sharad, who has all the details on this. Sharad, what's on radar, and how are experts and brokerage houses looking at this now?
It's expected that from 28% to 18% tax slab, that is where we are expecting the ACs to come in, the TVs to come in, the refrigerators, some segments in auto segment, and also the cement also. Now, who will be the key beneficiaries? Of course, there is no second guessing. We are having a consumer discretionary plays such as Blue Star, Voltas, Havells, Amber Enterprises, Dixon Tech, and all of them are coming out of a weakness in the seasonality. So it will be very interesting to watch how these stocks react. The cement pack, that would be buzzing as well. And another important trigger is the S&P upgrade rating happening in the sovereign, where global funds might also be coming in, and lower interest rate scenario augurs really well for the cement pack, as they're actually holding their prices also despite monsoon coming in. Interestingly, Eicher Motors, TVS Motors, Bajaj Auto, even Atul Auto, these stocks would be in focus in the auto space, especially on the entry level side. That is where the more GST benefit is expected to kick in. That's what the sources have been stating to the channel as well. Up next is the consumption part, which is of course a bit on the discretionary segment. From 12% to it can come to either nil or that 5% slab, and this is very important. These includes hair oil, jam, fruit juices, namkeen, dairy, notebooks, medical items. These items might be very sundry, but it's very helpful for the overall audience. Dabur, Mrs. Bector's, ITC, Bikaji, Pratap Snacks, these are the stocks which should be actually looking after, where there can be a good up move coming in. Hindustan Foods, and also the medical devices, that stock is Polymedicure, where you should be having a focus on. So a whole lot of stocks coming in the mid cap and the small cap space. These names might be a bit lesser known, but these are expected to jump in the trade. Also, the agriculture, fertilizers, and the renewable segment that PM Modi had mentioned in his Independence Day speech for these sectors, where good up move can be expected, and the Atmanirbhar concept would be applied for all the sectors which he spoke on. The stocks, RCF Fact, all these stocks would be in focus. Also, the agriculture segment, Kaveri Seed, Jain Irrigation, Dhanuka Agritech, that's where the action would be there. Renewable energy, long list coming in, Tata Power, Adani Green, NTPC, SGVN, Suzlon, and that is where the benefits would be kicking in as well. Infra names also, if you look at L&T, NCC, IRB Infra, that's where the buzz is also coming in the construction space. And of course, when the cement stocks come down, the prices come down, then it aids the construction names as well. Textile sector, that's the beneficiary coming for the GST inverted duty structure. And stocks such as Nahar Spinning, Indocount, Himmat Singha, Arvind, Nitin Spinners, all across the value chain are expected to benefit. However, the industry is having some pain when it comes to the exports because of the uncertainty in the global cues. Also, interestingly, sin goods or the luxury goods, that is where 40% GST rate could be applied, and that actually goes negative for Nazara Tech, Delta Corp, and a luxury place such as Ethers, Stanley's, and even Landmark Car, to name a few. Special GST rates are expected to continue in the diamond and jewelry segment. Not much changes for Web of Global, Rajesh Exports, and the jewelry segment. Pens, packing, container boxes, and capital goods rate cuts are less likely, so no major impact is expected to kick in, such as Link, DOMS, Cummins India, Thermax, and Siemens. So overall, this is the 360-degree picture which we have got for you. This is where the most of the stock action would happen in the day's trade.
All right, after Sharad, we have Varun standing by to give us an overview of what the brokerages houses like Bernstein, Kotak, and MK are saying about it. Let's go across to Varun. Varun?
This GST rate rationalization will actually impact the economy as a whole. It would impact the GST collections. It would impact the overall GDP of the country. But yes, it would give a consumption boost, and that is actually going to help, sentimentally at least, the markets today. Now, Bernstein says that an optimistic case of this measure will result in a net consumption boost of around $13 billion, and also it can push the overall central deficit by around 20 basis points. But a capex cut of around 5% will limit the overall impact to around 5 to 10 basis points. This can also lead to pressure on the rupee. But yes, the domestic themes that would actually do better. The overall fiscal deficit, which was expected to be around 4.3, can go up to around 4.4%. But yes, the overall losses of GST, which can be to the tune of around 1.57 lakh crores, that would be divided between the center and the state, and the center could actually take the larger share of the losses that could happen because of this overall GST rationalization. But they believe that the equity markets will actually cheer this overall fiscal push, and a recovery in demand in the economy will actually push the private overall spends going ahead. Also, they expect Nifty to continue to expect higher double-digit single-digit return for the rest of the year. They are overweight on consumer, equal weight on utilities, and underweight on industrials. Now, Kotak says that it could actually impact the overall consumption theme, and the net rate may provide 2.3 lakh crore boost to the overall economy, and this would be positive for autos and durables, although the cement sector will see limited benefit. And also they are saying there could be some price changes in the coming days by some of the companies. Now MK says that this will actually lead to overall losses of around 0.4% of GDP for the government. So, and also this will impact the CPI inflation to the tune of 50 to 60 basis point. Also you have Motilal Oswal, which says that it will actually reduce the retail prices by around 4 to 5%, easing overall household budgets. And they say that companies like HUL, Britannia, Maruti, Ashok Leyland, Voltas, these are the companies which could actually benefit. And also Antic says that this will actually provide a big consumption boost to the economy, and the rationalization coupled with the with other consumption tailwinds could actually drive the second half recovery, supported by the overall strong festive demand. So it's a boost for the economy. No doubt there could be some impact on GDP, there could be some impact on GST collection, but yes, it will actually lead to a consumption boost and sentimentally positive for the markets as well.